Welcome back, and it's another Talking Technical. And remember, this is a show purely for the public. You can send in your requests, we will cover them and see if we can handle all the requests because sometimes we do have more, but sometimes I slip in a chart like the other day, the dollar index that actually triggered my mind, and I thought, oops, I must show it to the viewers. But one of the requests that we had this week was Rand Merchant Bank, or the code RMH. In the past, I said I like this chart, simply being because look at this wonderful trend line that it had. It almost went all the way straight to the top. Nothing could perturb the chart. Everything on a little bit of a dip, it was a buy. And then suddenly, one morning, we wake up and we get this massive gap. Well, I've realized after that gap that it was actually a special dividend that the company was paying out. And what I always remember is charts like British American Tobacco that came out of Remgro, Reinet that came out of Remgro, even Richmond many years ago. And when all those charts were, you can say, bundled out of Remgro, we had always these massive gaps. We saw those gaps because what happened was they actually unbundled the company, and then suddenly the company listed and there was a massive gap. With Rand Merchant Bank, it's a different story because it's a special dividend. And they didn't unbundle a company, they actually paid out the money. So this is a little bit different. It is a fundamental gap. Remember, it is a fundamental gap because of the dividend that's been paid out. But I say to myself, Rand Merchant Bank Holdings will probably have a good management team. Okay, they will probably have a few assets, and I think they've got a property asset, if I'm not mistaken. But I also believe that they will have cash on their book. They will not pay out everything. And that's why we see this massive gap here. And for me now, it is quite simple. I say to myself, if I do have the company, thank you, I did maybe receive the nice dividend. If I haven't got the company, and I believe it's almost the same sort of thing like a Remgro or a Richmond or a company that's going to advance in future, there's a golden rule. I will say to myself, well, Frans, first of all, I've got this massive gap. Let's just show you the gap. I'm going to put a line in there. There's the gap. And there's the top of this gap. And remember, this is now a daily chart because I wanted to show you the gap that has been opened. This gap is between the high of that candle, and that will be between 62, and the low of that candle is 195. So there's a massive gap here. So what is the golden rule when you start thinking about these gaps with companies that hasn't unbundled a wonderful company that paid out a special dividend? First of all, you must make up your mind, do you like the company? If you do like that, you've got this gap. And then what I usually do is I say, let's look at volume, because volume will tell me that some of the informed investors will probably buy the company or they will actually sell the company. It depends what they want to do. And what do we see here? Just before that massive dividend was paid out, there's the spike in volume. Right at the top at around 2 Rand, the guy said, well, guys, we're happy. We've made our money. We're not going to worry about the dividend because usually the dividend is maybe less than what the gap is going to be. Don't worry, we take our money. So what they did, they sold it out. What do we see now? Since we consolidate below the 62 cents level, we see the volume is slowly but surely picking up. But what is the golden rule? The golden rule will be a spike in volume. Are we seeing it here? It looks like there's a little bit of a spike in volume developing if you compare it to previous periods. But above 62 cents, suddenly this company will start to work in this massive gap. And that tells you it will maybe take, and what is the rule of a gap? It's either going to close today or tomorrow, and listen to this, sometime in future. It can maybe take years for this share to close the gap. But the company must do well, and the management must do well, and they mustn't disappoint. So for me, it's quite simple. Above 62 cents, if you like the company, it is a buy. And where's my stop loss? My stop loss will be the low of this candle. The low is 51 cents. And bottom line is, it starts to work in this gap and you're happy to wait. I don't think this is a share for trading purposes. I think this is a share if you want to buy the company and you like the company, buy it and hold on to it. It must get above 62 cents. If it doesn't get above 62, rather just leave the company alone and let it carry on itself. Well, let's look at Old Mutual. Old Mutual is one of those companies that is a massive company, but they involved with investment management. That's their big business. And I just want to show you, this company actually looks ugly. And this is, remember, on a weekly basis. I mean, there's the trend line purely to the downside. Let's just show you the trend line. Look at that resistance line. It looks negative to me. It doesn't perform well. It's lower highs all the way down to the downside. I mean, this company was in October last year, can you believe it, a 17 Rand company. It's now a 9 Rand, 67 Rand company. And why are they dropping like this? Because usually investment houses is a proxy of the market. So if you do buy Old Mutual, you buy it for two things. You believe that the market is going to go higher. That's the one thing. And the other thing is you believe that the company's underlying investments will do well in future. So at the moment, nobody wants to be involved with the markets. They just want to sell the markets. They want to get out of the markets. So if you look at it, Old Mutual is all on the downside, and maybe there's an early sign of a falling wedge here, but it's early days. For me personally, it's a simple rule. It must get above this line, and that is 10 Rand 60 cents before the chart will look nice to me. Above 10 Rand 60, we can maybe see this falling wedge that I've preempted here, maybe break to the upside and can take it back to 12 Rand. This is the kind of company that you must maybe look at again if the markets start to recover, because the Old Mutuals, the Sanlams of the house, the Momentums, and maybe we've got time to look at them, I hope so, then you will see all of them are under pressure. Usually Old Mutual and all these wonderful investment companies, they sit with good management teams, they sit with wonderful assets underneath themselves, and they usually are liquid. And then you sometimes get companies like they are very liquid, like a Sanlam, will then maybe say in periods like this, listen, we're eyeing a company and we like this company and they may be a smaller investment house than ours. We would like to acquire them. Why? Because they want the business, they want the clients. But for me, it's quite simple. The share price must break above that 1065 on a weekly chart. If it doesn't do that, the momentum is to the downside, and just leave it and wait for it to play out before you get involved. Let us look at Monger Gold. Now remember, this company is listed on the Australian index. And I think it's maybe a viewer where his child is involved in Australia or work in Australia or immigrated to Australia. And he wanted to know, what do I think about the chart? Well, simple. The chart does fall off a cliff. It fell off 5 all the way down, right down to 0.20 Australian cents. I mean, that's massively down. For me, it's quite simple. Long base, long consolidation. There's my resistance line. I will look at that line for me, give me a guideline, and that will be only above 54. The chart will look okay to me. And where's my stop loss? My stop loss will be 35 cents. And then if from there, I mean, it's almost open to the top. So you cannot even give targets. It can maybe just rally away. So in a chart like this, I always say, be careful. Stick to your stop loss. Don't sell your farm or your house to buy it, and then wait for it to break. And the important thing is wait for it to break on a weekly close before you buy. In actual fact, I've got a friend of mine that sometimes say he waits for the break, waits for it to run up, and then he waits for it to come back and test this line, more or less. And if it turns around there, believe that that support line has been tested and has been proven as a success, and then he will get involved. Well, let's close off the show with Johnson & Johnson. Well, quite simple. Johnson & Johnson, one of those massive companies in the world. This chart makes me very worried because I don't think we've got time to show it, but look at it. It almost shows us like it's working on a rounding top here. And for me, this is the important line there. If that little line turns into a resistance, there you are, and that line is sitting at 150.19. If that breaks, then things can really get awkward, because then we know that this rounding top is in place, and then it can maybe take the share all the way down to 140. Where will I get positive? Only above a weekly close on that little resistance line, and that is sitting at 168.56. So above that on a weekly close, I'll get excited. Otherwise, I will just leave the company and wait for it to sort itself out. And only I will get involved. I will stick to a stop loss above that line. My stop loss will be 164.80. And maybe then can go back to 171. But I don't like this rounding top. It makes me nervous. Thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.